Alright, good morning guys. Welcome back to another stream. Sorry I did miss the Friday. Just been sick again, probably. Still am a bit sick, so you might hear a bit of like either coughing, sneezing, or like me trying to pull back my runny nose. But let's get started. Friday was prior to like New York was an immense drop, but relatively nothing did happen on Friday, which is half of the course due to the fact that I think price needed time to readjust, mainly due to the fact that we did have a massive dump due to the sort of news related to Coinbase stopping stuff like that. Let it drop the base bit. In terms of looking at this from like point of view, I mean, Thursday was a really good day. If you look at it from a long point of view, I mean, compare it to ES did what we wanted it to do. It went up. Bitcoin stalled here. Where's the pen? Bitcoin stalled here, and that's where I was like, okay, you know what? We're already at this high. Bitcoins didn't really move as much as it needed to move. It's at 50% of that weekly range. It's not moving. You're out. It's like, okay, cool. You sell here. Only downside is I was like, I needed to sleep by then, so I didn't bother shorting. And that's the thing with Black Swan events. It's like it's something out of the blue. Like typically, you could have easily got this short, and it's an easy short to say, because you're looking at one thing and it's just saying, oh, okay, Bitcoin looks topped out, even though ES has a lot of room to move, and it's like relative. Like you can see, like when we did come up into here, we did have that sort of really high pin where I was like, oh, okay, cool. It's a nice little stop hunt, so we expect some retracement. We got some retracement back at this area here. So yeah, it's an easy way to say, okay, you could have short Bitcoin down because that was 24. It's 24 hours. Come back in this in New York and you're flipping already. Hopefully by then, ES would have been around here or here, but it just stopped at the first sort of point and carried on. So it continued from Thursday, and it was a nice little continuation to end last week. And Bitcoin essentially was basically at the same area. It's just, again, it was moving a lot slower, and you're like, why is it moving a lot slower? I mean, you're at this stage here. It did a stop hunt here. Other than that, okay, you probably had headroom to potentially go all the way up until 23,650, but it didn't really go 23,650. So it's like, okay, they came in double top, and if you look at Bookmap, you can see the same. You can see that coming here. So yeah, okay, cool, clear rate, and it's like, yeah, everything sort of dropped the ball here. Like this could have been sort of a nice little like trade back, but again, news had to happen, so it happened. It's nothing you can do in terms of saying, oh, okay, cool. Can we predict these random occurrence of events? No, but you can hopefully try be in the same direction. Or just be out of a trade like entirely, like I was. Like sometimes you can either be wrong or you either just miss it, either. Yeah, again, kind of sad I missed it. It would have been really easy take. It's just like, you guys just said, oh yeah, that's enough for already next week. It's like, cool, don't really need to bother. Super easy sort of thing, but again, you miss it. And long at Mina at blah blah blah. And at this point, I don't actually know if you're joking or not. Let's say you're being serious, and like actually take this seriously. Oh Jesus. Okay, I definitely know you're joking now. And there's no way you're still in this. There we go. Okay. Again, on the assumption you're not messing with. Yeah, it's a nice little chart. Don't think it finds support here, even though it's got like a little 4 hour zone here for it. Just because I don't think Bitcoin holds where it's at right now. Realistically, like this again, it shows liquidity, or it shows like a sort of a lot of indecision, just either through like a lack of volume, or well, a lack of sort of other factors. And in this instance, it's not really a lack of volume. It's just we've got a clear divide where we have a bunch of longs that entered here. Not really too profitable. I mean, if we sort of shift those guys out and just focus on the ones that are current, you still have that divide here. So you're seeing long sort of accrue at this stage here, which is always nice to sort of see. But if you're shorting, if you go into here, and again, it's just ES is already sort of kind of looking a bit like it wants to be topped out. It's got a slight sort of move where it could potentially take out this high before falling. But generally it's not too bad to say, okay, first area you want to consider is here, second area is probably here. If it goes any higher, you just sort of cap yourself out there. Jesus, there's a lot of people scared. So I mean, it could emulate on Bitcoin where you rise a bit. No one's interested in trading it. I mean, there's some people trading it, but it's just, again, it's just they're balancing each other. Like you can see, there's even pretty even amount, even though there's sort of a large sort of divide. It's just numbers sort of balance each other's out, like generally. So it's not the fact that no one's trading it, it's just the market's just been neutral with how it's been sort of divvying up. It's just a lot of sort of, okay, no, let's trade this way, let's trade this way. I mean, if you want to renew interest, all you got to do is sort of come back up here. I mean, you can see there's always a lot of interest vested around sort of just above this area here. So you can see anytime you sort of go up here, it should be sort of a decent amount of interest. I mean, if ES decides to pin up, we're probably looking at it to fill in sort of this area here. Sort of look at it from this point of view. I mean, if ES is at this stage where it could sort of cap here or go slightly higher before hitting down. That could emulate here where it just either pins out and just fails here, or goes a bit higher before falling down. Generally think we might be in for a bit more down. I'm not really sort of too decisive on this sort of rebounding instantly, just because, I mean, it would have done it Friday, as it sort of would, I mean, like, yeah, it would have instantly done it on the Friday, considering it's just like the whole market like recovered. I mean, you look at sort of tech in general. Yeah, if you look at tech in general versus everything else, again, tech, it did really well on that Friday. So look at regular hours. You can see on that close again, it just closed a bit higher, inching one. So tech doing good is nice. Hey, welcome. But I mean, you got sort of this area here where, again, if ES does push up, tech does decently, Bitcoin does decently, goes for that bit additional extra, like you said, to renew interest. But once you renew interest, you can easily sort of decline that back down. So you can see how sort of like, looking at it, it's just like, okay, cool. There's some headroom upwards, push down. Does Bookmap have ES? Is just yeah, you can grab ES on Bookmap. Mine, for some reason, mine stopped working. I don't know why mine stopped working again. They should fix. Like, it's mainly because I haven't asked them to fix it. They haven't fixed it, basically. I'm like, ugh. But normally, yeah, you can grab it. You just have to have your own data feed, and you can plug it in. You can use Rhythmic, stuff like that. But I'm like, I'm already paying for this here anyway, so it's like, why not just use this? Does pretty much similar things anyhow. I know they always hate me for not just. If they wanted someone to be a salesman, then you should hire a salesman instead of an actual person that does want to trade and teach. But anyhow, that's a bit of a digression. But I mean, you can do it for multiple things. Let's see. For back data, you'd have to sort of be on the plan. I mean, you can discuss it here openly. Good morning. It's not this one. Am I signed in? That's the real question. No, that's good. Yeah. Yeah. I mean, another thing so you have to do is, like, if you want ES, so like you can get Bitcoin here and here pretty easily. If you want ES, you probably want this one because if you want to use it to trade. If you don't want to use it to trade, you can grab it on here. Have you used TRDR? TRDR I didn't really like it as much. And I always recommend getting the Plus edition for stuff like that. I mean, especially if you want to use it to enter trades. But I mean, you can always start here. If you like it for Bitcoin, you can do that. Generally recommend staying off the free one unless you like me and just chronically can be like keep your computer on because you don't have to worry about electricity costs or whatever. Then yeah, but Global Plus gives you back data. Except for futures, it's a bit iffy on back data. You don't really get too much, and I hate not having back data because it's hard just to see where things are going if you don't have back data. So I largely sort of so I always randomly get some connection cards and stuff like that. It's just like it's annoying. Or you can grab DX feed or Rhythmic. I use Rhythmic generally when I use Bookmap. But selecting Global Plus. Got it in autofill. Okay. Yeah, you just grab you grab probably Global Plus. If you do that, you get all these like fancy indicators. Hold, your short's getting squeezed. Oh, cool. Look at that then. It's being distracted. But yeah, it's again up to you. Like with let's see how bad it. Oh man, you gotta stop baiting me. How do I always get decently? Like, seriously, is that a screen? It looks like nothing. Oh wait, let's see. It's 5%. It's decent. Okay, cool. Yeah. I mean, there you go. You're slowly coming to a high anyhow. So slowly calling that. I think I have this charted on. There you go. Got it at 255. Why so late, man? Look, there's the. I definitely know I didn't chart this for me. Like, I definitely know I charted it for one of you, for you guys, and I just left it for you guys. Like, you should have these support lines on your charts all times. Yeah, you probably want to sell some now, I guess, because look, you're coming into this area here. Like, if you reject this area, you're selling. I mean, next break is probably a lot higher, which is, I mean, it's probably just targeting the highs anyhow. But if it doesn't break this, you're probably looking to sell it. I mean, you get decision and you have that entire 4-hour candle, but I mean, next sort of bigger support is what, 276. Again, yeah, sold half, but since I sold half, it'll break all-time high. Sadness. Just wait for it. Like if it comes back and holds here, just add positions, I guess. Like it's safer to do it. Like you gotta stop like saying, oh yeah, it's gonna do this, it's gonna do that. Just say, ah, cool, I sold half, I made money, on to the next trade. Uh, yeah. While that rips, let's go back into. Let's see if I finished it. Was this? Yeah, I mean, yeah, it's again. We get a lot of stuff. I mean, I think I'm pretty much done with what I need. Again, you got to provide your own data, so you got to subscribe to one of these feeds. Again, your experience will vary. Uh, I use Rhythmic. I've used DX feed. Have I used like? Yeah, there's only two I use, and I've liked both of them. So, uh, Rhythmic more so. I think it's less laggier, but it's your mileage will vary depending on how far from the server you are. Again, you want the lowest amount of latency. So and that just depends. Like you just ping the server. So yeah, as long as you're like sub 10 milliseconds, you're rosy. Bitcoin collecting longs, again, nothing sort of too surprising there. Whilst it does that, wait on doing that. So again, hopefully it collects enough longs that it sort of declines. No news on this Monday. That's good news. Tomorrow, testimonies. I don't like that. That could be sort of very scary for the entire market. Again, coming at 10 o'clock, so it makes sense that it makes sense it's at 10 o'clock then and not like a bit later. Uh, Other than that, the rest of the week, again, another 10 o'clock. So we'll say 10 o'clock's gonna be the time. Another sort of 10 o'clock, and this jobless came on Thursday at 8:30. Non-farm payroll to end the week. Oh god damn, this looks like an asinine week. Uh, Very much asinine. Yeah, that's pretty much it. I mean, I think nothing for today like that's important or relevant to us. Again, we don't care about Canada. We never have, never will. Uh, and I say that as a joke. Those who don't understand. Again, collecting longs. We'll see where it ends up if it stops here or continues a bit a bit faster. Again, it's just sort of setting up, and if it's sort of, I mean, it's bounced off the daily imbalance, which is nice. Should, yeah, and I never really liked Trudeau. I don't know why people keep eating the BS he spews at. Like the same thing with Barack. Come back, Barack. Sorry, I had to cough really loud. Okay, back to that. That was interesting. Again, collection longs already took out London's high. From looks of it, I mean, bouncing here is decent, but we'll see how long it can go. We'll sort of give it until 10 o'clock, see if we can sort of reverse course down. I think most of this will depend on if ES tries to continue for today. Again, they already sort of surpassed that, so maybe they're looking to sort of target that higher level, or just, I mean, they're still collecting volume here, so it's nice they can just stop it here, be a nice little double top. But again, we give ourselves the potential to have headroom here, so just prepare for that worst case. Oh yeah, it's trading view indicator. Oh yeah, you knew, I forget. Yeah, it's just trading sessions. There you go. There you go. It's this one. You just flip everything off. Again, I just included it because I get bored. I just flip everything off and just keep this. It'll tell you for session ranges and where you're looking for, essentially. For I have a whole video on my actual like channel dedicated to it, but yeah, it'll just tell you what times things will get set, and this little white thing here will be your daily imbalance. I don't know if you can extend it. Oh, you can extend it here. There you go. Extend out bars. Oh god damn, this looks so crazy. Yeah, you can extend out 50%, stuff like that, but it gets a bit messy when you do that. Oh, display. There you go. There's daily imbalance. I like things minimalist as possible, so things off. Even though I did create it to have noise. But yeah, the only thing you should really need to care about is like, okay, it sets a box, it stop hunts at a certain time. It just tells you, it always reminds you 10 o'clock is when you ideally want to trade, and when things get set up. After a while, you don't really need them. It's basically, it's training wheels essentially. Once you realize that, you know what, 10 o'clock is the only time you want to trade, and 10 o'clock EST. Don't worry about setting the time zone and stuff like that. Everything's set correctly, regardless of what chart you trade or what time zone is set. It's just set. It makes sure to do a good job. Already declining. Looks like it's run out of steam. You see that here. I mean, nice little pin. Not too many shorts coming in, which is a good sign. Again, shorts, large amount of shorts coming in here would have killed that sort of down trade. So it's good to see that there's a very shallow amount of shorts entering in at that top. We want to try probably catch rebuyers that say, oh yeah, just catch this dip, it'll continue going up or whatnot. If not, we just slam it. If we can hold out here and without collecting too much short, next bar will probably slam down. I mean, ideally you're looking for something like, oh yeah, it comes in here, there's your 50%. If it holds here, then we can maybe take a nice little double top, best case. ES wise, it's just doing the same thing with holding. It's cumulative volume delta. Again, if you're new, you don't know how to read it. It's just think of it. The best way to do it is think of it as just like energy or potential energy. I think energy was a bit. Yeah, energy is a better example where it's just how much effort, not work done rather. How much effort does it take? So from here to here, you can see that it took what 1,000 Bitcoin or 1,000 contracts to move it from here to here. That's not out of the ordinary. What you need to look for is when you get sort of larger drops with relative no sort of price movements. So let's say I don't think there's an example here or good example, but let's sort of hazard an example just for the sake of argument. So there's your zero line, and here's essentially where we've been trading for that day. So let's sort of mark that out. There you go, from here to here. You can see that we're moving sideways. Price negligible. That means there wasn't much absorption. Absorption is really important to try and sort of learn, especially when you're trading Bookmap, because it sort of shows that either one side is more favorable than the other. It's just the only hitting 10 a.m. on a painful. But for instance, let's say we say we had sort of this sell down like this, or this sort of just accumulate down here, and so we had sort of a relatively shallow movement but a lot of volume occur. So essentially what happened was this dipped in like this. It's really easy to say that then there's a lot of energy that was expended, so there's a lot of work done, because work done is just energy over distance and whatever. And that can translate into sort of bids saying, okay, so there would have been someone here, and let's say you didn't see a wall there, you didn't see a large sort of order saying there was like, look, 10,000 contract, someone wanted to buy it. Because mostly what people do is enter iceberg, so they show 1,000. They only show 10 contracts or 10 Bitcoin, and they have hidden, let's say 1,000 or 10,000 or however much, like a finite amount that's relatively large, but they'll only show this, so it won't necessarily show up on bids. That's why it's like really important to learn absorption early on if you want to utilize Bookmap effectively, because it's not going to be as cut and dry. Oh, they're going to hit into this because they're going to hit into this. It's just like, okay, over the course of from here to here, or over the course of the last, from this drop to this drop, have they been more short? Have they been more long? It's like, okay, they're more short here. Okay, then where's the money to be had? If they're more short here, and you can see that, actually, wait, good example, you can see that large amount of selling here occurs in this slot here, but there's not much movement, so someone's catching the bids. So there's buys, then there was probably panic selling occur. A tape reading is I would say for most people it's a stay away from it. But so like from here to here, so that's an insane amount of drop. That's what, from 3,500 to 55, so that's what, minus 2k. That's minus 2k from here to here. That was minus 4.5k, so minus 4.5 4k. So you can see there's clear disparity. What you said to need to learn, the principle of icebergs. Yeah, icebergs is just type of orders used by a lot of larger people. Again, it's just a very easy thing. It's like an iceberg, you only see 90% of an iceberg. I mean, well, 10% of an iceberg, 90% of it is hidden. So that's just why it's called an iceberg, because you have your 10%, or it doesn't have to be 10% relative to that, but you have a large amount of your order hidden. That's the whole reason why it's called iceberg. So you can see there's no large red wall here. That means there's no, like, for most people who read an order book, they say, oh yeah, there's no big traders here. There's no one trading this. But you know that, okay, if it took us from what, we moved from what, 23,500 to 22,200, basically nothing, like 1k. So 1k in price movement. So 1k in price movement, and it cost us minus 4.5k Bitcoin to move 1k, and it cost us minus 2k to move a negligible amount, so 200. So there's a clear disparity in saying, okay, so if you do some back of the envelope math, say, oh, okay, you'd have expected a minus 2k drop to relative to where we're currently trading to equate to around sort of 500 in a drop. So you'd have equated it to be here, but instead it sort of was happy around just losing around 200. So therefore there had to be sort of energy lost, or bids picked up, or basically there's waste in the system somewhere, and like energy can be created and destroyed. If there's a finite amount, so it had to go somewhere. It had to go into someone's pocket. So it doesn't suddenly disappear. I know crypto, some stupid things happen, but in general stuff, nothing really just disappears. So someone could have sat here only showing sort of, let's say 10, 25, or however much, but a relatively low amount of bids, but still picked up an insane, because people were still selling in. So it's like, okay, cool, that now we know that someone's net long here. So there's net long here, and there's a lot of shorts here. So a larger player is net long, so you can just say net long. Retail would have been net short, so retail short. So retail short, someone picked up some longs, they're short around here, so they're underwater above a certain point. And if you look at where This breaks in nicely. You can see that. There you go. As soon as we go slightly higher, everyone flips long. But as soon as we drop below here, everyone flips short. So we know that then people who are short are underwater here. So there's continual drive to want to take that liquidity out. And there you get this move here, a stop hunt. So you expect a stop hunt to occur. So you had a stop hunt, you mellow out, you're back at that same support. Because there's still, though you did a stop hunt, you necessarily didn't get some of that. Let's say you only got 20% of the people out. Again, maybe more, maybe less. So when you return back, and this is why support ends up being support and high support ends up occurring, is if there's trap volume there or there's a desire to reaccumulate retail at that set position. So you can see a fast movement. As soon as you see a fast movement, retail panic. So this is panic and they start shorting. So you can see they short back at that same sort of divide there. And again. So it's a very sort of controlled sort of thing. So we know that they're back again short. We know that they're either getting long here. So the more further we stray away, there's longs that are being profitable. So longs are now in profit above here. So they're in profit. So now comes to, okay, how do you know which direction the chart is going? So, okay, easiest thing to do is, what's the first sort of wave here is short. So we need to, what's the easiest thing to do? Probably get rid of shorts, because more people are willing to buy and hold on the hopes of reaching up much higher. So they'll easily buy up higher. So we need to, well, devise a way to say, okay, where would our shorts probably be stopped at here? Again, probably around here, slightly above liquidation. That's where we have our stops. So that's where we'd likely occur. You can see it's a very slow moving burn up. That means, sure, we're moving up slow and we're collecting longs, but at the same time there's shorts in between that still can drive the market up higher without costing too much. This because at the end of the day, it's just about cost effectiveness for the person who's making the market. So I mean, if you look at cost effectiveness in terms of for like the market, it's like, okay, so let's say, and I think I've done this before, it's a really long time ago, but I don't mind reiterating it. It's just your business, and your business is supplying liquidity, so X amount of liquidity to the market. It looks like alpha to the market. So you supply that to sort of the Bitcoin market. So in exchange for your liquidity, you got contracts out. So let's say you got a Y amount of contracts. And you obviously want to increase the initial investment, so your initial liquidity, as well as it wouldn't hurt to sort of increase this as well. So you're trying to increase both whilst primarily focusing on getting your initial liquidity out, or getting as much as liquidity as you possibly can, because liquidity in essence is control. So you supplied that. You have a large amount of liquidity. Again, if you draw up a pie, let's say you have 20%, it doesn't matter. It's as long as you have enough to affect the market effectively. I think 20% is a decent amount to have, but you still want a lot more, because this is your own capital. So this is capital, but how do you increase price without increasing your risk exposure, increasing the amount of money you put in? Well, the easiest way to do that is in futures. You have liquidations and stops. So easiest things to learn is stops for shorts. They get stopped out. When they get stopped out, they become market longs, and market longs, market buys rather, not longs. They market buy, so it gets closed at the price that is there, and that drives the market higher. Because thing was limit bids, so limit bids don't move the market. So let's say we only had a limit bid system in the market, it would just look like lines, and price would just move in a straight line without doing anything. Market buys are the only thing that moves the market higher or lower, because you're buying at whatever price the market gives you. So let's say there's 10 contracts there, there's 30 contracts here, and you want to buy 40 contracts at market buy price. So you obviously hit up to here. Let's say there was only 5 here, and the next one was that your 20. There's 25 of your rest of the contracts were all the way up here. So it would have filled your bids in 10 here, 5 here, and the rest at this price here. So again, it would have drive the price higher. So that's why you look at stop hunts as liquidity and as ways to move the market, because instead of risking instead of them risking their capital to move markets, they can use other people's capital and leverage it, unintended, to move markets. Simple as. Hopefully I didn't lose you guys. Are you guys still with me? Well, relatively with me. Because I don't know, it might seem foreign for those who've never been exposed to these concepts before, and especially if you're new. Yes, again, come back up. Everyone's so antsy to short, they instantly try shorting. Same thing happening on Bitcoin, most likely. Again, you see that large thing, everyone instantly really antsy to short. Or apprehensive. There you go. See, same thing here. So again, they move very similarly, and this is why, even though I don't have actual buy sell data, I can make relatively well adjusted assumptions based off of when things do things. So now we know, okay, it did go high, but we know there's a lot of shorts here, so we can easily drive the price a bit higher if we really wanted to. And that's what you got to look at. It's like, oh, okay, cool. Now there are more shorts that, okay, there's shorts in the market here, so that means they'll have a higher price, and they're fresh. So when we hit them, we can push market up higher. So we go long, and price catches stops. Price begins solid resistance. Otherwise, we short and price stops. What else? Yeah, right. So if someone going long here, and the reason why they go long is because they think, and it comes down to what's taught. So what's taught is breakout. So there's breakout longs. So people think, okay, price is at this high, price is going to go higher, it breaks out. And what they don't realize, the only reason it would work in a very flash instance is because they need to go higher, because they know they can get breakout traders. So you can see how they catch longs here, and these longs here were through stops. So they're stops. So stops got hit. And again, this is where you'd consider being short. It's like, okay, cool. Stops are getting hit. Oh, they're still driving price a bit high. It's just probably over in a couple of minutes anyway. A couple of minutes later, they come back. It's like instantly sort of drop that. So you'd have instantly been rewarded. Maybe it would have been too fast for you, but nevertheless, it's still sort of adequate to say, you've missed the first swing, let me grab the second one, which is this support here. So you know that retail traders are trapped short here. So and they're trapped short here for whatever reason. They say price is moving down, so I sell down. It's just they like to. I don't know why. It's just they always sell at lows, like, and they'll do that purposely, and they'll reverse markets whenever they get enough people in a short. And maybe the retail trader thinks, oh, look, a couple of minutes, like I'm profitable. Oh yeah, it's going down. Then it flips. So in essence, all you're doing, and the easy way to think of it is just you're doing the inverse of what the majority of the internet does, or whatever Jim Cramer says. Basically, because that's where the money's had. The money's had in the opposite side of the trade where most people are. The people who you don't want to counter trade are the people who are providing liquidity. Oh my god, my chest hurts. So, and you can see we know they're short here, so this is an adequate system. We only trust supports if they have trap shorts. We only trust resistance if they have trap longs. So we know there's trap longs here. There's longs trapped here. So there's longs trapped here, and there you go. We pinned to it. We didn't go up higher. We trapped more here. There's your breakout, whatever. But you can see how it comes in as soon as Asia finish sets up. They're like, okay, now we're done. Asia market opens here. They let Sydney take it up, and this is why people who care about Sydney are saying, oh, it doesn't matter. Asia has a universal time. They set here. They okay, now we're done. So they trap longs on the market open, and this is why you 30 minutes again. Market open, 30 minutes later, hour later, or I think Japan opens an hour early actually. Then there you go, and everything sets up. I mean, you can do it at most instances, but in instances where they delay it a bit, they take out because they have a bunch of shorts here. And now we have an area of shorts trapped here, longs sort of trapped here. It's kind of a seesaw. So if we support here, catch enough shorts, and again, and the reason why you want to sell partial, and the reason why, because you're never too sure if they grab here and say, okay, they reverse here or they reverse here. It's all about probabilities. It's because, like, and obviously you won't ever make a market, you won't ever have enough to affect a market like that, and it doesn't matter. So all you got to do is try to be in line with people who does. So this is why, okay, they have maybe a possibility of reversing at this high, so maybe you sell 20% of your trade here, 20% here. If they hit 20% here, at least you're somewhat profitable. And that's why you have that philosophy of selling at the highs, because you never know, and you don't sell 100% because you never know if it continues higher. So at least you can sell upwards, and in essence, that's what they do anyway. If you look at larger traders and if you try profile larger traders, and I think we can do that in the longer time frame. And there you go. Look, there you go. You see that they trapped shorts, and they're just punishing them now. Bitcoin here. So yeah, you go weekly. Yeah, that's fine. Yeah, I'm happy to help. So, and this can be done in in a lot of motions, but you can see when first one came in, they got lots of shorts in. Then you can see how they came back in. They got the second trade, so they're adding back. So they're happy to wait it out for the long game and say, okay, step one either here or on the way up. Look, they say on the way up, on the way up, on the way up, the iceberging before dropping. Get a few trillion on your account and you just make the market. Yeah, get a few trillion and then make the market. And even then, you'll probably lose it to someone who's better than you, because it's about being effective. And this is what it is. It's just slow rinse. They have targets to be met. They have quotas to be met. So they have to make a set amount. But at the same time, they don't need to go overboard. They have to make sure the market is healthy, so there's always new money coming in. And that's the thing with sort of why there's certain seasonalities to trading. And if we sort of go into not ES, the spider. Peak of the year, there we go. Let's grab as many data points as we can. You can see there's certain large spikes you can see here, usually around this quarter changes, uh, give or take, where there's tendencies for price to do better and some months to do worse. Because when we have months, we need to sort of reverse that to renew interest. So this is essentially renewing interest. So we have new money coming in, so new liquidity, because liquidity runs dry here, and as soon as you get a small little bit of hope, you get new liquidity, and then you can just crash it down on people. And it's just you got to understand it's a vicious game. It's a vicious game, and it's, as soon as you learn that, the better, essentially. Despite it's been 1 year, I'm still waiting for my. Yeah, like I know it's insane, like how slow they are to update stuff. Hey, but you're gonna be trading essentially your whole life, because after you don't need to trade for money, you trade for fun, because it's a hobby. Like I'm burnt out of trading at this point. Only reason I'm doing it is because you guys, because I can just I want to switch it up a bit. You know, it gets boring a bit after a while. It's just the same thing over and over again. But now we know that's a support. To support, we can trust it because there's shorts there, essentially. And look, they're already shorting down to that support. Okay, we can maybe expect one more spike high. Maybe we get that sort of nice little stop hunt high before we drop. Who knows? Usually you want to sort of say, if we, for majority of the times, if you especially see stop hunt of a range like here, you usually want to inverse your position, like bang on 10 o'clock, especially if we have news, or like there you go, we got a very aggressive one, so on. But sometimes it comes in early and just goes directional. But it's just, it matters if they have a news date early on, like 9:30, or like, I mean, they had news at what, usually embargo for news is 8:30, 9:30 is market open, so that's when everyone else trades into their direction. So you can see as soon as we hit sort of 9:30, you saw people buy this candle up, so you saw longs enter in, and as soon as longs enter in, they're like, okay, bye, goodbye, have fun. Yeah, that's like, you can get a lot further in trading if you just do the opposite of what most people do, what most retail traders do. So all the patterns that you learn, like if you're at a high, if you're at like a point where, oh, this doesn't make sense to work, and everyone's saying, oh, no, it'll work this time, please trust me, just do the opposite. like like those patterns are what, coin flip at the best. At their worst, they're like 10 to 1 10 to 1 odd. Like it's just like insane. Like it's just betting. I know we didn't really talk about charts this much, I mean too much today, but these are my favorite streams because I get to just talk about dumb things. One thing they teach you to place yeah, I know. But no, okay. Stop loss should be. You know what? Tomorrow we'll do that tomorrow. It's a longer conversation. We'll talk about stop losses tomorrow, and risk analysis tomorrow, because my time's pretty much up already. I know. I'm not complaining about my time too soon, but yeah, my time's up. So because they need to prep for the next guy, stuff like that. Exactly, for the most part. Again, topic for tomorrow. Give us something to talk about tomorrow. We'll end it here. Hopefully you guys enjoyed today's stream, found it informational, at least picked up like 1 or 2 things that you didn't know prior. Other than that, hopefully you guys have a lovely day. Enjoy the rest of your trading day. Trade safe, and I will catch you guys tomorrow. Peace.